could feel the relief at the nicey end of the Nasdaq because the mega meltdown is back. You got Tesla a bit up nicely this morning. We just had Invesco with us saying this is a justifiable situation. This is not a mania. This is not an exuberance. You have the likes of Tesla also flying higher. There's the bell at the opening day. We're up 0.3% on the Nasdaq at the moment. And in terms of the rest of the asset classes, keep an eye. You got Eurodollar up an eighth of 1%, even though PIMCO, for example, are not as long of US Treasuries as they are relative. They have a preference for the UK and Canada. That's Andrew Bowles. A little bit more auction paper coming to the market. 5s and 7s will come, but PIMCO talk about the pace of rate cuts in the USA being slower than the rest of the world. And gold is up by 0.6%. We've gone through some records recently on that because there is a little bit of concern and hesitation ahead of the PCE on Friday. Core PCE expected to come in at plus 0.3%. One stock to watch, I mentioned it to you, it's Tesla. Now, an Italian newspaper is reporting that the country's officials have contacted the EV maker about their electric truck. Craig Trudell is with me. I mean, this truck is, it's a thing of beauty if you look at it conceptually, but talk me through. The Italians are keen on this.
Yeah, I think it's worth kind of taking a breath on this one, Manus, just in the sense that this company has been making semis under pilot production for more than a year, and as of late last year, the company, an executive said that they had roughly 100 in their fleet. So this is really moving at a pretty glacial pace for Tesla. We also had a very interesting interview on Bloomberg Television last week with the CEO of Daimler Truck, who believes that Tesla would have to redesign the semi for European use, that it's too long. So, whether or not, Tesla ever actually makes the semi in Italy, I think we're a long way from learning that. And my suspicion is that this is a reaction to Elon Musk saying in Germany recently that, eventually it may make sense for Tesla to make semis there.
Okay, it's always it's an interesting one between price cuts, BYD competition, car production cuts, and here you go, a good news story coming through from Italy. We'll run with it. Craig, thank you very much. Craig Trudell. To the social media spectrum, Trump Media Technology Group soaring ahead in the first session as a publicly traded company. Abigail Doolittle has the details on DJT. Abby.
It's pretty amazing. Just moments ago, it was up 58%, currently up closer to 30%. But either way that you take a look at it, absolutely soaring on its first day of trading. The Trump Media and Technology Group, after its post-SPAC debut, they basically did a SPAC merger with Digital World Acquisition, as you mentioned, the new ticker DJT. Difficult to forget with the former president, his initials, of course. And it gives the parent company of Truth Social more than $275 million in capital, a win for Trump amid legal and financial woes, we should say. And at current levels, Trump's shares are worth, it's hard to calculate at this moment, at 11, when it was up 11%, that his shares would be worth $6 billion. So many, many multiples of that. He is subject to a 6-month lockup along with performance requirements. Now, while making the entity profitable is important in this election year, Manus, this may be the ultimate way of doing an informal bid or look at the election. Lots of investors using this as a way to bet on his bid for re-election. CEO of Accelerate Financial Holdings saying that the underlying business fundamentals will matter at some point. But for now, quote unquote, DJT is the mother of all meme stocks. With the stock up 32%, up as much as 58% today, hard to disagree.
Let's see what the long-term trajectory is on the profitability. Abby, thank you very much. Abigail Doolittle there with the very latest on the social media scene. Let's turn to the consumer space. Krispy Kreme donuts are coming to McDonald's across the US. It's the burger giant's latest effort to boost the business breakfast. Simone Foxman is there. Oh, a Krispy Kreme at 3 a.m. in the morning. There's a thought. Simone.
Yeah, that's a sugar rush. It's also a sugar rush for Krispy Kreme investors is what the shares are doing today. We've seen them pretty much recoup all of their losses so far this year. This is the biggest rally in Krispy Kreme shares since the company IPO'd back in July 2021. We understand that there was a test of selling Krispy Kremes at McDonald's in 2 cities parties in Kentucky, Louisville, and Lexington at 160 restaurants. According to a statement announcing this deal this morning, the demand exceeded expectations, and so Krispy Kreme donuts will roll out in the second half of 2024 and end up in all McDonald's locations by the end of 2026. Part of the reason investors like this, though, according to the CEO of Krispy Kreme, this will double the points of access for people who want these Krispy Kreme donuts across the country. It had been having a bit of a tough year, too, because, as Citi put it, the outlook it put forward back in February was not so sweet, with pressures from inflation and other things on its ingredients. Also saw a little bit of a slowdown in terms of expectations for what people wanted, but now it will be a much wider availability of Krispy Kreme donuts, and that's clearly a positive for the stock this morning, Menace.
Volume is everything, isn't it? There you go, Krispy Kreme and your McDonald's. Simone, thank you very much. Let's pivot to Maersk stock this morning. Now, this is the Danish firm. It is the chartering company of the vessel that, as you can see there, crashed into the Francis Scott Bridge in Baltimore. Naha Katan joins me now. So what do we know in terms of the staffing? Is it Maersk staff who were on this ship? Who actually owns the ship? How does Maersk using this ship play out?
Thank you. Thank you for having me. So actually, its shares fell after it said it chartered the ship, but the ship sails under the flag of Singapore, and our Bloomberg intelligence experts say that the company may not be directly responsible for the collapse because the company had no crew on board and the ship was operated by a charter company. But we are seeing possibility of an extended shutdown, and that's going to cause major congestion for travelers and businesses, possibly for months, because the bridge allows commercial ships to enter the port of Baltimore. It's one of the top ports in the U.S. By volume and value. It handled over 10 million tons of cargo annually. And it's also the largest U.S. port for handling cars and light trucks. It also handles sugar, imported sugar, coffee, and coal for export. So we're expecting that resulting bottleneck could accelerate a shift of goods through to the West Coast ports.
Would that almost be immediate, Naha? I mean, we're in the midst of managing a crisis, a human aspect to this crisis, a logistical aspect to this crisis. How quickly can shipping divert? It literally is instantaneous, isn't it?
Right. I mean, for now, if you go around the bridge, it extends the time from half an hour to about an hour. So this would have to be, pretty quick, a pretty immediate shift.
Okay. Naha, we are waiting that news conference to begin. As it does, we will bring that to our viewers. Naha Katan there on the implications for Maersk, the chartering company of the ship that collided with the bridge in Baltimore. Now, China is seeking to shore up confidence in the economy. Some of the U.S. CEOs in Beijing are receiving an invite to a Wednesday meeting with the top Chinese leader, widely expected to be President Xi Jinping. Pfizer and FedEx are the chiefs potentially having those meetings. Enda Curran is with me now. This is a very interesting moment. We have monetary policy, fiscal policy, and then we have brand Xi engagement, don't we?
Indeed, Miles. It looks like classic outreach from the Chinese authorities. Several of the big CEOs of U.S. companies are in Beijing at the moment for a conference, and throughout that gathering, the officials in China have been sending a message to the world that they are open for business, that the economic downturn is in hand, that they have policy tools to turn that around. And now we have our colleagues reporting that it looks like there's a meeting with a senior leader being set up for Wednesday. It's expected to be President Xi Jinping. That's a similar kind of model to what we saw at APEC in San Francisco back in November, when the executives had an opportunity to had an audience with Xi Jinping back then. So, to your point, it's when you consider the backdrop being about FDI at its worst in decades, overall kind of global sentiment towards China being pretty negative at the moment, this looks like a classic opportunity for President Xi Jinping to meet with leaders of some top US and global companies and, of course, make the sales pitch for what China can offer them.
From an economic perspective, and you talk about FDI, how critical is it? You've got fixed asset investment, you've got the consumer spending, you've got industrial spending, but you have FDI is perhaps the biggest issue. It's been that vacuum of money coming out of China. The flow has not been in the right direction. How critically important is it to Xi Jinping, and where do we stand on FDI right now?
I think it is important, Manus. I mean, the backdrop is we know China's economy has rebalanced over the years. It is now, of course, more consumer-driven than it has been. It is no longer just about manufacturing and export, say. But FDI is still a very important generator of economic activity and profits and exports, and especially during the downturn that China's experiencing now. Of course, they want foreign know-how, they want foreign technology, they want foreign capital, they want to see that sector expanding and growing. Some of the sectors aren't necessarily critical for their own national ambitions, but at the same time, at this stage of the economic cycle, I don't think many countries would want to be actively turning away FDI. So it is important. And the other side, of course, of that ledger, as you mentioned, is the portfolio flows. Global investors really have turned south on China over the past year or two at this stage, and there's no sign of that turning around in a hurry.
The price reaction for an economist, Intel and AMD, I'm sure you didn't spend a great deal of time mining down into that, but if I look at that as a reflection of the potential for escalation in tariffs and restrictions, there doesn't seem to be much of an off-ramp, even in this Biden administration, on the tariffs. And the risk is that you go into a second administration from Trump and that things escalate. You know, how important is it for the world that there is some kind of an off-ramp in tariffs, that we head backwards rather than forwards and higher?
Well, we certainly seem to be in some kind of a holding pattern right now, Miles, ahead of the election. As you say, the current administration was pretty hawkish also on the trade front. They maintained those tariffs against China. They pushed through various export and investment controls and the like. And of course, now we have to wait and see what kind of administration comes out the other side of the election in November. But then, to your point, regardless which side it is, it's going to be either pretty hawkish or very hawkish altogether on China. And if it is the latter, with former President Trump talking about, you know, tariffs of maybe 60% or higher on Chinese goods, then obviously that would certainly impact trade between the world's two biggest economies, and it would ricochet around the world. It wouldn't just be tariffs, don't forget, there are other tools as well around investment and export controls. So it's fairly delicately poised right now. You know, the world economy has a lot of fragility underneath the surface of OK GDP growth. So if the two biggest economies do go at it again in terms of a resumption of the trade war, then obviously that will reverberate right around the world.
And of course, this all comes as the Bao Forum takes form. There's a lovely line in there about FDI slumping to a near 30-year low in 2023 in China. So they've got a heck of a lot of work to do. And thank you very much, as ever, for being with me, Enda Curran, there on the macro story with China. Plenty more ahead on Bloomberg. We're waiting for the press conference to begin in Baltimore. You're looking at live shots of that pretty tragic scene of the bridge in Baltimore. We'll bring you that news conference as soon as it begins. The S&P 500 is on track to notch 5 straight months of gains from November through to March. Bloomberg's Jess Menton is here to talk me through the stats. This is a rare winter rally, Jess. I mean, it'll be quite something. If we do get to the close of business on Thursday, we'll have only done this a couple of times since 2013.
That's right. And it's very rare, specifically if you're looking from November to March, because that time period usually, as you know, there tends to be tax loss harvesting. So when you look back in history, usually you might see a down year in December or January. But the only other time this century that we've seen a 5-month streak of gains from November to March was actually in 2013. And then before that was actually in 1998. So that just shows you how rare this is. So in order for that to happen, the S&P 500 on Thursday would need to close around 52.47 and trying to get close to 52.50 there to hold on to those double-digit gains. So we'll have to see over the next few sessions.
And in terms of this melt-up, I mean, you've got Oppenheimer going for 5,500. You've got SocGen talking about 5,500. Is there any sense when you look at the data, if you rally as furiously as this in a 5-month period, what happens in the ensuing periods?
Well, typically what happens, and Jeff Hirsch over at the Stock Traders Almanac, he's really an encyclopedia of stock market knowledge. So he crunched the numbers to look at how rare it's been to see that 5-month span from November to March. And typically what happens is the remaining of the 9 months, there's actually been only 11 instances since 1950, but typically over that 9-month span, the remainder of the year, so the second quarter, third quarter, and fourth quarter, you do see in all 11 of those instances the S&P 500 notching gains over that time period, not just for those 9 months, but also on an annual basis. And through those 9-month period, it was about a 12% gain for the S&P 500. And then not just that, we also tend to see gains also in April, 9 of the 11 instances there. So I know people are eager to see as the calendar flips to the second quarter whether or not those gains can hold, but history typically bodes well.
Bodes well. What, I mean, you know, I just had Invesco with me a little bit earlier, and they were saying, look, whether it's 3 cuts, 2 cuts, or 1 cut, it is not going to interrupt the narrative in the equity market. And I'm hearing this more and more. It is about the earnings, and those earnings had better live up to expectations. To what extent do the people that you talk to predicate their bullish view or this enthusiasm to rate cuts as well?
Well, it really, to your point, builds on the case of where the projection is for corporate earnings. And once again, in the fourth quarter, we did see those expectations pretty smashed there and beating things, especially when you came in and the expectations were for the S&P 500 to have earnings growth close to flat, but it ended up coming in around 8 or 9% higher than that. But if you look on an annual basis for the S&P 500 earnings growth this year, it's supposed to be around 11%, but those numbers haven't really budged too much from almost last May. So the consensus there is if growth continues to remain strong, maybe that could be feasible. But then if you do see growth pull back, whether or not that would have to be rectified in some of those profit expectations. But again, a lot of that has been carried, not surprisingly, by that Magnificent Seven and those growth stocks over the past year. So the base effects, if you just look year over year period as we go through the remainder of the year, won't be quite as robust compared to that base effect they were going off of 2022. So it'll be interesting to see as that narrows out with those tech and growth companies, what that means more broadly for the index and what other corners of the index we can see really carry some of this profit growth expectations.
Jess, thanks. Great story and certainly worth a read. Jess Menton there from Bloomberg reporting. Let's turn back to the tragedy at the bridge in Baltimore. Joining me now to talk about the impact on trade, it is Bloomberg's Brendan Murray. Brendan, good day to you. We're waiting for this news conference to come to tell us more information about the Francis Scott Bridge, the tragedy. But in terms of the perspective of this port on the eastern seaboard, why is it so critical to the flow of global trade into America and out?
Well, it's one of the top 20 ports in overall volume in the United States, but it's also a key port for auto industry exports and imports. So that is going to be a major issue. By all accounts, the port is going to be severely restricted for perhaps months. It might be closed completely for a long time. So the question is, where are all those goods going to flow? And those are questions right now we're asking to other ports along the eastern seaboard. The Port of Baltimore did about $80 billion worth of cargo value last year. That's about $6.5 billion a month. So every month that the port is shut or restricted is going to cost the local economy a lot of money. The port is one issue. The other issue is the traffic congestion around this major U.S. trucking corridor. All the traffic that would have been on that bridge is going to have to go around the other side of the Baltimore Baltimore Beltway because much of it can't go through the Baltimore Harbor Bridge, which prohibits hazardous materials like chemicals and flammables like propane and those sorts of things. So it's just going to create on the ground and the roadways, it's going to create a lot of problems for goods that need to flow up and down the eastern seaboard.
Okay, Brendan, thank you very much. And as you can see, we've got a live shot there of the press conference, waiting for that to happen at the Francis Scott Bridge. No indications that the crash was intentional, according to sources in the U.S. at the moment. We're counting down to that press conference, and we'll bring that to you as soon as it comes live. Let's get how the coal miners are faring in the wake of this bridge collapse. Abby, you're with me again. We're just hearing from Brendan there. It's not just autos, but it is also a major coal port as well.
It certainly is, and we have some of the coal miners down sharply. In fact, we have CONSOL Energy having its worst day of the year at this time. At one point, its lowest, its worst day since October of last year. And the reason you were just mentioning, the CONSOL Baltimore Marine Terminal is used to load coal into large ocean-going ships in the area of the collapsed bridge. So again, CONSOL Energy is down, Ramaco down 3%. And then we also have some of the railroads down, at least one, because CONSOL's terminal is served by Norfolk Southern and CSX Transportation. Norfolk is down about 2.6%, or at least it was earlier. And then if we take a look to the upside, though, we do have the social media ETF up 1.8%. And this, of course, having to do a lot with the SPAC IPO, basically merger, the debut of Trump Media and Technology Group. That stock right now up 40%. And then if we take a look at the sector action very quickly, Manus, we usually do it in the other direction, but of course we wanted to move right into those coal stocks and talk about the railroads on that tragedy in Baltimore. We have most sectors higher, 10 of 11 to be specific. Overall, the index up about 0.25%. Discretionary is up 0.7%. The lone sector to the downside, well, that is energy, with oil down just fractionally.
Abigail, thank you very much. The ramifications are broad. Coming up in the show, the market moving events that will take you. Actually, we're just going to go straight to the press conference.
This morning, our state is in shock. And I want to take this moment to speak directly to the people of our state. To our first responders, I'm in awe of you. I'm in awe of your courage. I'm in awe of your strength. I'm in awe of everything you do for each and every one of us. You saw a crisis, and you said, what can I do to help? And our response teams are doing everything in our power to rescue and recover the victims of this collapse, literally as we speak. People who, as we speak, are out there are divers, are air assets, people who right now are working to save lives, and are doing it because the state asked. And we will update the public as the work continues. To our partners inside and outside of government, I know this has been a long night. We started coordinating immediately after the Key Bridge collapsed. We've been standing together every step of the way, from our county leadership, to our city leadership, to our state leadership, to our federal leadership. And I'm grateful to call each and every one of you not just colleagues, but I'm grateful to call you friends. And to the people of Baltimore, and each and every one of the 6.3 million Marylanders who call our state home, I recognize that many of us are hurting right now. I recognize that many of us are scared right now. And so I want to be very clear about where everything stands. We are still investigating what happened, but we are quickly gathering details. The preliminary investigation points to an accident. We haven't seen any credible evidence of a terrorist attack. Our administration is working closely with leaders from all levels of government and society to respond to this crisis, and not but just by addressing the immediate aftermath, but also by building a state that is more resilient and a state that's more safe. That is our pledge, and that's our commitment, and we're going to keep that commitment. And lastly, to the victims of this tragedy and their loved ones, all of our hearts are broken. We feel your loss. We're thinking of you. And we will always be thinking of you. We pray for the construction workers who are on the Key Bridge, and we pray for everyone who has been touched by this tragedy and their families and all of their loved ones. But Maryland, we will get through this because that is the Maryland spirit, and that's what Maryland is made of. We are Maryland tough, and we are Baltimore strong. So in the face of heartbreak, we come together. We embrace one another, and we come back stronger. That's what we've always done. That's what we'll continue to do. And that's what we're going to get done together. And we're going to pray for Baltimore. And I'd like to turn this over to Senator Van Hollen, who's done a remarkable job in our fellow delegation in providing support. So thank you, Senator.
Thank you, Governor. As the Governor said, we come together. We come together in Baltimore, we come together in Maryland. First of all, our hearts go out to all those who were on the bridge and their loved ones. We pray for them. Our gratitude goes out to the first responders who, as we speak, are out there continuing to conduct search and rescue operations. I want to thank the Governor, the Mayor, County Executive, all the people gathered here as part of Team Baltimore and Team Maryland. And the federal government is with them as a partner. The Coast Guard, as we speak, is also part of this mission. Coast Guard cutters, Coast Guard aviation assets. I spoke twice today with Secretary of Transportation Pete Buttigieg. Pete Buttigieg has pledged that they will do everything they can to very quickly release emergency response funds for this important project. The National Highway Transportation Administrator is on his way to Baltimore if he's not here already. They will be releasing those early funds once all the parties are fully engaged. Second, the National Transportation Safety Board. I talked to the chair this morning. She and her team will be conducting an investigation of what happened. And finally, the Army Corps of Engineers, naval assets for looking below the surface and clearing. All of this is going to be part of the effort. The Governor is leading Team Maryland, the Mayor and the County Executive, of course, Team Baltimore. But I'm just here to say, together with Ben Cardin, Senator Cardin, and Congressman Fume and others, the federal government is your partner in this effort. Thank you, and again, to the people of our state and the people of this great city. We're with you. We love you. We will get through this together. Thank you, Governor.
Good morning again. Paul Wiedefeld, Secretary of Transportation. Just a few updates since our meeting this morning. The crew that was out there working was basically repairing potholes. Just so you understand, that had nothing to do with a structural issue at all in the facility. At this time, one person has been rescued, and so far, and our efforts continue in terms of that. Engineers are on site right now, determining both some of the structural issues, obviously some of the debris field, and we'll start to work that, but we'll work hand in hand with the NTSB before we take any further action in that area. With that, I did want to introduce the FBI for a few comments as well.
Hello, my name is Bill Del Bagno. I'm the Special Agent in charge of the Baltimore Field Office. First and foremost, I want to say that our hearts go out to everyone that is impacted by this tragedy, especially the victims and their families. On behalf of the FBI, I would like to say that we are with you, we're with Baltimore, and we're with the partners every step of the way. The FBI, when very first looking at and assessing this matter from an investigative standpoint, I want to be clear that there is no specific or credible information to suggest that there are ties to terrorism in this incident. The FBI has been part of this response from the beginning. We came within 1 hour to the command post and quickly lashed up with our very strong partners all along the way. We will bring whatever resources that the FBI has to bear. We've already brought our crisis response, our victim services, and just recently our underwater search evidence recovery teams are on site. And we will continue to provide all those resources as long as it takes. And as the investigation goes on, we will take it to its logical conclusion along with our partners. To the people of Baltimore, to the public, I ask you to be patient as we go through this and as information becomes available to us. And lastly, I want to say thank you. Thank you to our partners. Thank you to everyone who in the FBI and counts on the FBI. We will always bring what we need to the people of Baltimore, and we are with you. I'd next like to introduce the Coast Guard.
Good morning. The Coast Guard is still actively searching at this time. We are using response boat crews from 2 of our local Coast Guard stations, one of our helo crews from Air Station Atlantic City, and also one of our cutter crews on one of our 87-foot patrol boats. We will continue to work with our local, state, and federal partners during this tragedy. Thank you.
Governor, we're going to start from this side. Governor, as far as you are aware, was the collapse of that bridge inevitable as that ship hit that part of the bridge?
No, we're still in the process of investigating exactly what happened, so we don't have any further details about whether or not it was inevitable or not.
No structural issue with the bridge?
No, there was. In fact, the bridge was actually fully up to code, so we have no further information about what happened during that time.
Governor, is all shipping in and out of the port now stopped completely, and do you have any estimate very early on as to how long it will be before shipping can resume to the Port of Baltimore?
Yeah, we don't have any estimates on timeline because right now our exclusive focus is on saving lives. Our exclusive focus is on search and rescue.
Could you give us a better sense for the number? Because we've heard, I know Mr. Wiedefeld said one had been rescued, but earlier from Baltimore we heard that 2 had been rescued. Can you tell us the total numbers we're talking about that
All right, you've been listening to a press conference out of Baltimore on the tragic Francis Scott Key Bridge collapse. Let's get some highlights now from Brendan Case. And Brendan, listening there, you just heard Governor Wes Moore, the Maryland governor, saying that the exclusive focus right now is on search and rescue.
That's right. The main focus right now is on finding any other possible survivors who could be in what is very cold water. At the same time, he also said, as did an FBI agent, that all signs at this point would suggest an accident. There's no evidence of any kind of terrorism activity. However, obviously, there will be many, many investigations in the hours and days to come.
Yeah, we heard that from an FBI officer from the Baltimore field office, that there is no specific or credible information to suggest, rather, that there are ties to terrorism here. Talk to us about the response from the administration. Of course, we heard from Senator Chris Van Hollen saying that he spoke with Transportation Secretary Pete Buttigieg and that the Biden administration, it will work to release emergency funds in this case.
That's exactly right. There's obviously a very expensive cleanup coming. They'll have to figure out what to do to rebuild a bridge potentially. You know, a project that could take a very long time. The administration says it will find the funds. That's all going to be something that'll be sorted out, you know, in the weeks to come. In the shorter term, once they finish the search and rescue operations, there'll have to be a series of adjustments just to do sort of a workaround in terms of commuters and trucks that use the bridge, you know, very intensively each day. So really just kind of in the early stages here. But yes, the administration is definitely going to find the funds and the support that it needs to come up with.
All right, Bloomberg's Brendan Case, thank you so much. Of course, as we continue to follow developments, of course, after the Francis Scott Key Bridge in Baltimore, it collapsed this morning after being struck by a ship. That collapse happening at about 1:30 a.m. Now coming up, we're going to be speaking to the CFO of Ford, John Lawler. Don't go anywhere. This is Bloomberg. Well, we learned at the top of the hour that March consumer confidence data came in below estimates. To get specific there, U.S. March consumer confidence came in at 104.7. The estimate had been for 107 on the dot. So a bit of a disappointment there. Not seeing too much reaction in the market right now. You take a look at the S&P 500, currently higher by about 0.3%. So not much reaction either way. But let's broaden out here, because in other news this morning, Ford affirmed its full year operating guidance for 2024. The motor giant still sees adjusted earnings of $10 billion to $12 billion and adjusted free cash flow between $6 to $7 billion. That is the same forecast provided in early February. Now, for more on the company's future and its plans for the EV market, I'm pleased to say we're joined now by John Lawler. He is Ford's Chief Financial Officer. John, great to see you in person.
Nice to see you as well.
We have to start with the news of the morning, and that is the situation that's unfolding in Baltimore right now. That is after the collapse of the Key Bridge early this morning. And of course, that is the largest U.S. port for handling cars and light trucks. Now, my understanding is that Ford makes most of its vehicles in North America, but does Ford import any cars or components through the Port of Baltimore?
Well, first and foremost, our thoughts are with those impacted in the city of Baltimore. It's too early to tell at this point exactly what the impact will be on the business, but through COVID, we've had experience in managing supply chain disruptions, and so we'll have to work that, and we'll find the best solution for those parts that will be impacted.
Well, John, that was my next question, and I know it's very, very early, and this is a rapidly changing situation, but do you have any sense about what impact this could have on the supply chain?
Well, of course, it's a large port with a lot of flow through it, so it's going to have an impact. It's just at this point, we'll have to understand what that means for us specifically. We'll work on the workarounds. We'll have to divert parts to other ports along the East Coast or elsewhere in the country, and it'll probably lengthen the supply chain a bit. So we'll continue to work that, and I would, say that we have experience now in understanding supply chain disruptions, and so we'll just put that experience to work and figure out the best solution.
Well, I appreciate that color again on a very developing situation. So let's switch gears here and talk about electric vehicles. Obviously, I'm sure you spend most of your days talking about EV demand specifically. It really hasn't grown to the magnitude that many expected. Of course, Ford has dialed back some of its EV investments. At what point might Ford just revisit the EV strategy and your investment schedule?
Well, I think it's a matter of not if, but when. So EVs are growing, and they're growing at a quick rate. It's just not as fast as the industry had anticipated. So we're adjusting appropriately to that. We're adjusting our capacity to meet that demand. We've seen significant price reductions, so we're working on our business fundamentals to improve those as well. But I think the important thing is EVs are coming, and they will be part of the transition. The other thing that I think is very important for consumers is to understand that hybrids and plug-in hybrids are also a solution that we offer. So we see ourselves as the company of choice. We offer gas vehicles, diesel vehicles, hybrids, plug-in hybrids, and pure EVs. And as a first mover in the market, we think we have a pretty good read on where it's headed, and we're adjusting appropriately.
I definitely want to get to hybrids because I see a lot more of them on the road, and it seems like a lot of people are going to that alternative. But let's talk about cost here. I mean, anecdotally, it feels like most people say EVs cost more. We're in a high inflationary period right now. How are you responding to that? Of course, Bloomberg has reported that you're developing a $25,000 compact EV. Can you share more about that?
Well, about 2 years ago now, we realized that the market, where the sweet spot in the market should be, is in a lower cost EV. And so we started what we call our Skunk Works group, which is a group of really highly qualified EV designers and engineers. We have them out in California, and they're designing a low-cost platform for us so that we can hit what we see as the key market, consumer market for EVs. And that is going to be an approach of having an affordable, low-cost solution for consumers. And so I think as vehicles like that come into market, you'll start to see that demand increase and then the scaling of the EVs increase across the industry.
Well, we're talking about EV demand in the context of that consumer market, but let's talk about the commercial market, for example, because it feels like this drop-off in EV demand or, less growth than expected has really been specific to the consumer market. Why do you think that there's more resilience and more sustainable demand when it comes to commercial vehicles?
When you look at commercial customers, one, they need it for their entire fleet compliance. But number two is they have the ability to really understand the total cost of ownership for those EVs. And for part of their duty cycle, it is a lower cost solution. And they've been taking a much more thoughtful approach. They've been buying small numbers of vehicles, testing them out in their fleet, understanding that cost of ownership, understanding where they can save money and where it is a better cost solution for their fleet, and then they're moving forward. So we're starting to see more traction in the commercial space, and especially with our Transit electric van.
I'm also curious about how the charging infrastructure differs for commercial vehicles versus passenger vehicles, for example. I mean, when you think about buses in a city, for example, they all sleep in the same place and you can just have a charger there. But I'm curious about how you're thinking about that.
So that's one of the key things with our Ford Pro business, our commercial vehicle business. We offer charging solutions, not only the hardware and setting up the charging in their depots, but also the software to manage the fleet as well in the charging. So it's a real opportunity for us to provide an end-to-end solution, the vehicle, the software, the charging solutions for our commercial customers.
Well, we have to talk about the competitive landscape here on a global scale because actually one of Ford's top EV executives recently described Chinese EVs as, quote, a colossal strategic threat. How are you combating that? What is Ford's plan here?
Well, make no mistake, it is a significant threat. So it's affordability. They have a low-cost structure. That's where our small EV comes in, as well as that Skunk that Skunk Group that is working on that low-cost, very advanced architecture for EVs where we think we will be able to compete with the Chinese and other low-cost manufacturers.
Well, it's going to be definitely interesting to follow the developments there, but let's get back to hybrids. I'm super interested in this space, and it was interesting, actually, you had Morgan Stanley's Adam Jonas out with a note this month that he sees the, quote, hybrid renaissance as really a direct competitor for that incremental EV buyer. Do you see that within your own lineup? Do you see hybrids taking share from EVs?
We see hybrids as a duty cycle alternative for customers. Electric vehicles duty cycle doesn't work for some, and those that don't want just pure gas vehicles or diesel vehicles, they can go for a hybrid. That's why we've continued to invest in hybrids. We continue to offer hybrids. So you can see it as a bridge to full electric, and we think it's something that consumers are really leaning into because of all of those factors I cited.
Do you have plans to roll out more hybrids?
Yes, we do. Well, we're launching a new Escape. We've just launched a new Escape hybrid. We're launching a Kuga hybrid in Europe. And so we have the #1 selling truck hybrid in the Maverick and the #2 selling truck hybrid in the Ford F-150. So we're #3 in the U.S. in hybrids, and we continue to plan on offering more solutions to our customers.
All right, there you go. I do also want to talk about the relationship with the UAW. You did have the Ford CEO, Jim Farley. He said that the company's once strong relationship with the UAW was hurt by the strike. And with that in mind, what is Ford doing to repair that relationship?
Well, I think it's just about understanding that both of us have similar goals, and that is making Ford Motor Company as strong as we can be, providing the most jobs that we can provide, and producing cars and SUVs, et cetera, for our customers. So we're working with them, collaborating with them, and over time, things will improve, and we're already seeing that. So they've been strong partners of ours, and we're going to continue to work with them. It's in the best interest for both parties.
So an ongoing conversation, an ongoing relationship there. And I'm very aware that I'm talking about the chief financial officer. So I do want to talk about your recent return to investment grade, of course, that credit rating. Layer that on top of higher labor costs and those deeper EV losses. How are you protecting that IG rating?
Well, when you look at our business, we have 3 or 4 very strong businesses. We have Ford Blue, which is our gas and diesel business. We have the EV business, and we have Ford Pro, which is our commercial business, and of course Ford Credit, the bank. Both Ford Blue and Ford Pro, great profitability, growing business, strong cash flows. Now, E is experiencing losses right now, but we know that we need to bring that business to stand on its own and to be profitable, and we're working towards that. And then, of course, a competitive advantage for us is the bank, where we finance our consumers, and we have incredible customer loyalty there.
All right, John, that's a good place to leave it. Really appreciate your time this morning. Of course, that is John Lawler. He is the Chief Financial Officer of Ford. And let's turn back now to the markets. We have a great guest to do that with. Joining us now is Mark Connors. He is 3iQ Head of Research. And let's talk about markets at this juncture, because we have a whole lot of event risk out of the way. Of course, talking about the Federal Reserve, and it's basically a very quiet period for earnings. What are the next catalysts for this equity market at this juncture?
Okay, I like your optimism about the lack of events as far as the Fed is concerned, and thanks for having me on again. So I'm going to go back to what Mr. Lawler was talking about at Ford. So he just said what's working, and you brought up, is commercial. And the reason on that segment, we think of Ford, we think of the F-150. Never enough, like we saw in 2020. But car buyers now, there has to be a rationale. And you need cash flow in order to make decisions these days. And that's why the commercial segment over the consumer is running. And the second thing he said was costs. We are a low-cost provider. Margins are under assault. So when when we prepped for this call today, I did the classic, looking at sort of the tech names, the Magnificent Seven, really Microsoft, Apple, and NVIDIA to start, and compare them to Walmart, Citibank, to Exxon. And at a level when you look at who's performing, it is folks that can free cash flow. And the reason where we're going to land the plane here on news is Reddit. If there's one vignette this year, it's not NVIDIA where the information is. It's on the Reddit IPO. I think people should read the S1 about how they're making money, how it's an AI play, and how the company's been together for 20 years. It's not just a fly-by-night. But I'll stop there. So the event, I think, is that slow-moving AI train has barely left the station.
Barely left the station. Well, specific to Reddit, it's interesting to hear Reddit called an AI play. Of course, they have big ambitions for those data licenses, of course, selling their data to train AI models. But it feels like Reddit at this juncture is an advertising story. And when it comes to a lot of these social media stocks, these companies that rely on advertising dollars, I feel like that's kind of a big question mark, Mark.
Yeah. It is nascent. So that's why I say AI, even the big folks, even when you're looking at what Google's trying to do or what, ChatGPT has already done, all firms are still figuring out how to incorporate it. AI is not the killer app. It is the killer fuel. It still has to be managed by firms in order to bring yield. So back to Reddit. Reddit has a curated and stratified club or cadre of users. And I think that's going to be very relevant to large language models because they can then toggle about the importance of each user based on the duration they've been on the platform and how long they spend each day. And Reddit captures that. So we're not here to pound Reddit or pump it rather, but I think what they're doing is still untapped, but they have the right model.
And it's interesting, I mean, looking through your notes, you're very clear that this IPO, it's not the market top. And I've definitely seen a few people on social media make that joke.
Yeah. And we're going to find out, though, in a couple hours when GameStop announces to see if, the Wall Street bets boys and girls are going to be out there pounding and pumping. Yeah, this is yesterday's news as far as GameStop. We are still Fed related. I know we weren't going to talk about that, but you can't get over the fact that, almost 5-6 weeks ago, Jay Powell was on 60 Minutes. We call it Boomer TikTok. And he was there pounding the table saying, hey, listen, I'm doing my job, but Treasury is deficit spending, making my job of managing unemployment, inflation, and Treasury functioning very difficult. So I think that we're not out of the woods there. This is 1 year since the banks blew up in March. No one saw that coming. So I still think we got some bumps along the way as far as rates and banks and the economy are concerned.
So maybe there's still some shoes to drop when it comes, of course, to some of those regional banks, those lenders there. I do want to talk about energy because you highlight that in your note. And so far, I mean, we're talking about tech, we're talking about meme stocks, and energy feels like it has a much different vibe. When it comes to that sector, how are you thinking about it?
So energy, if you look at crude, the feeder stock, let's compare energy to banks. Banks monetize interest rates. The old yarn was they're a 3-6-3 operation. They borrow at 3 in the morning, they lend at 6 in the afternoon, and they're on the T-box by 3. That model's gone. In energy, the feeder stock is obviously commodities, and we are in a commodity renaissance. So we think, similar to the 70s, our firm, a digital asset manager, likes digital assets. We think those commodities, not all of them, but certainly Bitcoin, Ethereum, are the fuel for the next generation of protocols and platforms. ExxonMobil has free cash flow that mimics that of a tech company because they use technology and they've come up the curve and they're on the right side of this next commodity, this supply chain constrained environment that unfortunately has become all too, reminded of this morning with the news in Baltimore.
Yeah, it definitely feels like some of these big oil majors have been overlooked. And Mark, I don't have a ton of time left here with you, but you said something interesting, and that's that Bitcoin you're lumping in as a commodity. Are you really thinking about Bitcoin as a commodity?
We are. So back to where we started the story, who's winning? Firms that have free cash flow that are able to have produce more with less, and technology's done that. So Bitcoin, we look at it as a cash flow per token, similar to what we see with Microsoft and Meta. So there's cash flow in the system, and Ethereum has more revenue on chain than does Visa. So those animals are out there. They're not yet discovered. Diamond in the rough, Katie, still to be discovered. But yes, we deem it to be a commodity.
All right, diamond in the rough there. Mark Connors, always great to speak with you. Our big thanks, of course, to Mark Connors of 3iQ. And it is time now for Social Climbers. Look at the stocks making waves on social media this morning. And first up, talk about a sugar rush. McDonald's announcing today it's planning to sell Krispy Kreme donuts at its restaurants by the end of 2026. Customers will be able to order individual donuts or in packs of 6. And good news, the donuts will be sold all day. Next up, we have the WeWork Redux. The ousted founder is submitting a bid to buy the bankrupt company for more than $500 million. WeWork, which was once valued at nearly $50 billion, filed for bankruptcy last year. And finally, a dash of good news for McCormick. The spice maker's first quarter profit and revenue beat estimates, and McCormick says that costs came down and higher prices offset slower volumes. And you can follow all the latest company buzz on TREN Go on your Bloomberg terminal. Now coming up, a new semi-private jet service is facing growing regulatory scrutinies. Details next from Alex Wilcox, the CEO of JSX. This is Bloomberg. Well, Boeing's still a big focus today after the plane maker announced yesterday that CEO Dave Calhoun will step down at the end of this year. The company's board had been struggling to get a handle on its spiraling safety crisis. And joining us now to discuss is Kristen Liwag. She is Morgan Stanley Executive Director. She has an equal weight rating on Boeing with a $235 price target. Kristen, great to have you with me. Just to start off and set the scene, what's your reaction to the shakeup that was announced yesterday?
Katie, with what happened with Alaska Airlines flight in January, investors have been expecting change. So yesterday we saw the stock react slightly positive to the change, and ultimately this is welcomed by the market because what we have today is that Boeing's not able to deliver conforming aircraft. So with the leadership change, the question is, has that changed, and what's the opportunity and risk facing Boeing?
Well, one of the big questions, too, is who's going to be the next CEO? And I'm curious, in your view, who's the ideal candidate here, internal or external?
When you look at the internal management within Boeing, we have been seeing one particular person getting promoted to different positions, right? We've seen Stephanie Pope become president and CEO of the services business to COO, and now being the head of BCA. If you were to look at who's being groomed here potentially as a successor, it seems like her profile would match with the internal rate of promotion. Now that said, industry experts and the market are looking for potential external candidates, because if internally at Boeing they've been struggling with execution for many years since the crashes of the 737 MAX, is it time for change for an external candidate? That said, it's not like you have very many folks available with the experience needed to lead a company like Boeing. So I think Boeing having the duration where the CEO change doesn't happen till year end buys them time to look at internal and external candidates.
Yeah, it's a great point. Of course, we're talking about a small pool here for a very tough job. And it's interesting the way that this went down, because according to Bloomberg News reporting, this shakeup came after United, Southwest, and American, which of course are three of Boeing's largest U.S. customers here. They pressed Boeing directors for a meeting without Calhoun present. Again, that's according to people familiar with the matter. But Kristen, in your view, how difficult will it be for Boeing to win back the really the hearts and the confidence of some of these major airlines?
It's going to take some time. Ultimately, when you look at airplanes, you're flying at 85% the speed of sound at 35,000 feet. Every little part matters. And with the failures for some FAA inspections, Boeing's got some work to do. And also, when you look at production rates that seem to be in the high 20s per month, and Boeing's financial target of $10 billion is predicated on the company getting to 50 airplanes per month in the 737, that's a pretty tall order. And so it's a balance between quality and quantity. And ultimately, there's a shortage of airplanes and demand is very strong. Airlines all want aircraft, but at the same time, again, you have to balance quantity with quality. So it's really hard to please everyone when you're struggling with execution. And having aircraft is a big differentiator in a period where capacity is desired.
And let's talk about what this means for the stock price, because you did see Boeing shares. They did pop yesterday. They're down again today, and they're down 27% year to date in 2024, just a total wipeout there. In your view, do you think that the worst is over for Boeing stock, or is there more to come?
Katie, I think there's more to come. If you look at the bear scenario for Boeing, and by the way, my bear valuation is about $130 per share. I think that's underestimated by the market, because ultimately the FAA is taking a harder stance on looking at Boeing's non-conforming manufacturing. And if you look at deliveries in January and February and month to date in March, it's been slowing to a trickle, which means if Boeing is producing at a higher level than what they're delivering, you're going to have a cascading amount of inventory aircraft piling up at Renton. And that means that you have a lot of working capital tied up for aircraft that you can't deliver. That could hurt their ability to ramp up later. And so when you look at the effect of this, if the duration of a stricter view on the FAA on non-conforming manufacturing stretches for even longer, that could be more painful for Boeing. And if we see a potential risk to a 30% cut in deliveries in 2024, cascading into 25 and 26, we could see a valuation of $130 for Boeing.
And I mean, many have framed Boeing's struggles as a positive for Airbus. And you and I were speaking in the commercial break about how it's really a duopoly between Boeing and Airbus. But talk to me about Embraer. When it comes to who could actually pierce that duopoly and be a serious competitor here, could Embraer actually be an alternative?
I mean, Katie, you hit it right on. Building aircraft is really difficult, and entire nation states pour in their industrial resources to build an aviation industry, and many haven't been successful. And Embraer, based out of Brazil, has actually done it. The Embraer E195-E2 actually competes with the 737 MAX 7 and the A319neo, as well as the Airbus A220 family. And so if you look at a potential third player, there really aren't anyone else with a certified commercial jet aircraft except for Embraer. So in this environment where demand exceeds supply and Boeing's unable to deliver the airplanes that they want to deliver, and by the way, Airbus, even though they're producing more, also is not able to deliver all the aircraft that they want, there's only really one aircraft manufacturer you can order from, and that's Embraer, and they have available slots in 2027, 28, 29. And does it make sense for Embraer to only have a $5 billion market cap, considering how difficult this industry is? And what we learned from Boeing is, look, producing airplanes is hard.
Kristen, great perspective, of course, on Boeing's struggle and also the industry at large. Hope to speak with you again soon. That is Kristen Luwag of Morgan Stanley. Let's stay in the clouds because a new Dallas-based startup is out to disrupt the airline industry by offering semi-private chartered planes at near business class prices. Joining us now, I am thrilled to say we have Alex Wilcox. He is the CEO of JSX, and of course, JSX, it's a hop-on jet service that serves 48 routes across the U.S. and Mexico. Alex, it is great to talk with you because it almost sounds too good to be true. Of course, you can hop on a 30-seat jet in Morristown, New Jersey, or in Westchester and get down to Boca or Miami. Your flights start at $300 each way. You take a look at some of your competitors, they're charging thousands for that same service. How does JSX make money?
Well, Katie, thanks for having me, and I appreciate the lead-in. We make money because we have more than a couple of people on board. Obviously, with one or two customers on board, like a private jet, we'd be losing our shirts. But we have 30 seats on our public charter aircraft. They are Embraers, by the way, and we fly the Embraer 145 very proudly in a configuration that's unlike what you see on the network carriers. There's no overhead bins. There's bright lights. We're the launch customer for Starlink as well. So we're the first and so far the only air carrier on planet Earth that has Starlink on board every airplane, every flight, every day. It's, by the way, faster than home services through cable or even Fios. So, as you can see on the video, there's 30 seats in every plane. It's a very spacious 30 seats. There's nobody sitting next to you. There's nobody breathing on you. There's a cocktail table between you and the customer across the aisle from you. And there's room for dogs. We welcome lots of dogs on board, up to 17 pounds, by the way. Small dogs that fit under the seat are free of charge, unlike our competitors, and large dogs, you can just buy a seat for them. There's plenty of space.
Yeah, no middle seat. I have to imagine that is very popular. And to your point, Alex, you have more than just a couple people on the plane, which certainly helps when it comes to making money. But how thin are the margins? I mean, I'm asking for the casual viewer who is probably sitting at home saying, it's got to be expensive to fly even a 30-seat aircraft.
Well, our model is great. We've been flying for 10 years, actually. Obviously, COVID took a little chunk out of the business for a period of time, but our latest quarter, we had 15% EBITDA margins, and we're very proud of our financial success as well as our popularity with customers as the highest rated air carrier in North America, if not the world. We've got a net promoter score that are frequently in the 70s and 80s, in an industry that gets 20%, in some cases get negative net promoter score. So the financial results are there, but the financial results only exist because our customers love us and they keep coming back to us. We provide a super seamless experience. You can show up 30 minutes before the flight, just hop on and go. For your casual viewers that haven't tried us out yet, you can buy tickets, of course, at jsx.com. And we're growing very rapidly, and we attract a lot of attention from our customers, in particular for the very unique kind of service that we provide that we're very proud to do. All 1,000 people that work with me every single day have customer service at the core of our focus. And that's really what differentiates us in the industry.
And of course, that rapid growth, obviously your competitors aren't thrilled. And some have pinpointed, of course, your safety standards. Some have said that JSX should be required to meet post 9/11 safety protocols such as scanning IDs, limiting liquids, removing shoes during screenings. Have you received any information from the TSA about any proposed security changes to these public charter carriers?
Well, look, we're in touch every single day with NTSB, FAA, TSA, and the DOT. And obviously there are regulators, and we're in close touch with them on a regular basis. And not once has anyone from any of those agencies told me directly that they have a concern about any particular safety or security practice. We are way above and beyond compliant in terms of our safety and security practices. A lot of the reasons that the aviation industry is so safe is because of safety programs that we voluntarily adopted. Flight operations, quality assurance, safety management system, and a pilot ASAP program. These are all things that are the big contributors to commercial aviation safety. The public charter category in which we fly is 45 years old, 0 fatalities in 45 years. The Embraer 145 that we fly, I'm almost hesitant to say it, has almost 30 million hours of total time across the airframe, across every airplane in that category ever built. Again, 0 fatalities. We have an unblemished 10-year operating history. We're proud of our compliance record. We're proud of our operating history. And anyone who challenges it is definitely not challenging it with us or with the regulators, but they're just trying to basically create fear, doubt, and uncertainty among our customers because they're afraid of the competitive threat that we represent.
Well, Alex, I appreciate the context there. And let's talk a little bit more about that growth, because I was looking at it. You're up from 6 routes in 2016 to 48 routes today. You were flying 641 flights in 2016. Now you were at nearly 35,000 flights in 2023. Are you planning to add more routes from here? What goes into that?
Yeah, we absolutely are planning. Obviously, you need airplanes to fly. We have 48 aircraft. Which is the right-hand column there that you're looking at on the screen, that are currently in service. We actually own 77 airplanes. We're acquiring some more even as we speak. So we've got several years of growth ahead of us. Excuse me. And, every airplane is going to fly roughly 4 or 5 flights a day. It's a lower utilization kind of operation. We don't fly 10 to 12 hours a day like crazy because we own these airplanes outright. We don't have to pay a note on them. So our balance sheet is very, very strong. We're a debt-free company as well. And so we fly when the market wants us to fly. But in terms of future growth, as you mentioned, about 35,000 flights last year. We'll do more than that this year. And then as we add additional airplanes in the coming years, every one of those airplanes will be several hundred flights a month in additional capacity. So the sky's the limit for us, no pun intended. There are plenty of airplanes for us to acquire out there and to put into service. We don't have the same kind of supply constraints that were referred to in your previous segment. So we've got an open road in front of us.
Alex, I'm sad to say I only have about 30 seconds left with you. And in those 30 seconds, would you consider an IPO in the near future?
Well, it depends what you mean by near, but I wouldn't rule anything out. That's a question for our board and shareholders. But certainly this is the kind of category and the kind of company that's going to have public company quality ratings. And I'm not talking about a SPAC. I'm talking about a real IPO if and when the time comes.
All right, Alex, so enjoyed this conversation. Really appreciate your time today. Our thanks to Alex Wilcox, the CEO of JSX. Now coming up, Apple is being accused of violating antitrust rules. We'll be joined by Bill Baer, Brookings Institution visiting fellow, to discuss what the DOJ must show. This is Bloomberg. All right, it's time now for our Wall Street Week Daily segment. And today, we're taking a deep dive into the DOJ's antitrust lawsuit against Apple. Here with more details, I'm pleased to say we have Bill Baer. He is Brookings Institution visiting fellow, as well as Wall Street Week host David Weston. And David, this is all about the walled garden.
Yeah, exactly right. And that's where we're going to start with Bill. Bill, thanks for being here. This is your old shop, the Antitrust Division of the Department of Justice. This is not the first time somebody's gone after Apple. And by the way, Microsoft and others for walled garden. Why is this one different?
Well, what the Department of Justice complaint says is that this ecosystem that Apple has set up and claims it's all about consumer privacy, consumer security, is in fact a mechanism to lock us into our iPhones. And I'm an iPhone user, love the product, but that they basically manipulated that ecosystem to make it very hard for anybody to communicate off an Android system, that they're engaged in a series of actions that profit the company, but serve no useful purpose to consumers. They are trying to limit competition, the government says, in order to maintain their dominant position in the U.S. market, which is somewhere between 60 and 70%.
So, Bill, you bring up the U.S. market, but which market are we talking about here when it comes to the DOJ allegations, and how strong is their claim here?
Well, first, look, I know Apple has suggested it's a worldwide market, but that's not how antitrust analysis works. It's who are the consumers that are potentially affected, subject to price increases, to diminished innovation, diminished product quality, and that group of people are the U.S. consumers. So Apple's effort to turn this into a worldwide market, which diminishes their market share, I think ultimately is going to fail. But the government is going to have to show that these limitations that Apple puts on the use of its product are actually designed to improve product quality and not intended simply to maintain or enhance its dominant position with the iPhone. And one of the challenges that Apple is going to face is there are internal documents cited in the DOJ complaint which suggest the motive here is to limit competition and not to protect and benefit consumers. I was in private practice many years, worked with companies who wanted to tell a public story about how everything they were doing was worthwhile and consumer-oriented. But you go through the company documents, and sometimes that's not at all what they're saying to each other inside the boardroom.
Yeah, I have to say, Bill, when I was in private practice, I never had a case there wasn't a bad document or two, and there's always somebody who's saying something foolish. But let's assume for a moment the Department of Justice actually prevails in this. They prove that there is a relevant market that they monopolize and that they've taken anti-competitive acts. What are the likely remedies? Is it really going to tear down the walled garden?
I think it's going to open up the walled garden. I don't think, the government hasn't indicated exactly what remedies they want, and that's the wise thing to do. You got to see what the court says is a problem, is an antitrust violation. But I suspect that limiting its ability to, for example, degrade the quality of messages that come in on an Android phone, preventing Apple from basically only allowing the Apple Watch to sync with your iPhone, those sorts of restrictions, which arguably are not justified, a court could say, you got to give it up. One of the interesting issues at play in this case is that over in Europe, there is a new law in effect just in the last couple of weeks called the Direct Markets Act. And that law is requiring Apple to do some things in Europe in terms of opening up its walled garden that it says it just can't do. And so we're going to have a track record to see whether Apple's claims that its whole ecosystem will collapse and consumers will be injured by what's going on in Europe. And, there are complaints from the European Commission about whether Apple is in good faith complying with the new terms. That'll sort itself out. And so we may have a test case that a court can look at to see whether Apple's claims that it can't do things differently, in fact, hold up scrutiny.
Well, Bill, I'm glad you brought that up because it is interesting that you have these two parallel allegations happening at the same time. And it sounds like you're saying potentially the EU case may provide some sort of blueprint, perhaps, for what's going on at home.
That's exactly how I see it. You know, it's going to take, 2, 3, 4 years for this case to get to trial, for us to have some sense of whether DOJ's allegations hold up or not. In the meantime, Apple, which is saying we cannot do what DOJ says we need to do, is going to be having to do those very things in order to comply with the law in Brussels, the European Union law. So we'll have a sense of what works and what doesn't.